How is everyone feeling with the market down? Some of you are quite excited because maybe you didn't quite invest a lot over the past year or so. You have a lot of dry powder, but some of you might be not so happy. Now, of course, the market has been on a tear, right? Relatively in Malaysia, a little bit in the US, in Japan as well, over the past year. And so a lot of people have been doing really well, including ourselves. And of course, just as we anticipated during the raging bull market, that there will be a raging bear as well. Now, we're not quite at the raging bear, but of course, if unless you've been living under a rock, over the past week, there have been a lot of news that have been coming out that has been negative. Rate hikes, Japan, and a crash seems like it's coming, right? At least the start of a crash. But Jonathan, give us a down low on what is actually happening.
Yeah, so we actually highlighted this in our previous webinar, our top stock market winners for 2024. So if you actually joined that webinar,
Yes.
you have known that we talk about this potential overheating in the market. So you can see these are the two charts that we showed during that webinar. So number one is that the US investors and fund houses, they all took in a lot of leverage to invest in the equity market. And if you look at the right-hand side over here, the average cash level, it is at, I'll say it's like an all-time low, similar to 2021. So this 2021 is also a tech correction during that time. And yeah, so they are heavily invested in the market.
By the way, guys, I just want to show, if you can go back to the next slide. On your right, the cash balance, if you notice that it's really just 4 to the high of 8%. Doesn't sound like a lot, but you have to understand that there's trillions of assets under management worldwide. So, going from 4, just like as an example, if let's say there's 5 trillion, right, worldwide for assets under management. There's more than that, but let's say it's 5 trillion. So going from 4% to 8% is 200 billion. Correct? 200 billion. So yeah. Sorry. Yes, 200 billion.
Yeah.
So
that's the magnitude.
It's quite a lot, right?
Yeah,
it's
it
really
is a lot.
quite a lot. US dollars, by the way.
Yeah.
Right.
And of course, you can see that in our local market, right, foreigners and also local institution has been buying up a lot of our stocks. And of course, they are not only using their cash, they also are using some sort of margin to invest. Now, so what happened was when all these investors who took in a lot of margin, right, some of them actually took debts from the Bank of Japan. So when these banks of Japan, right, they all provide loans, usually it's at a very low interest rate. Some is like 0% interest rate. So it was a very good place to actually borrow that from. And what happens was the Bank of Japan decided to increase the interest rate by a little bit to 0.25%, even though it's like a minuscule increase, right? But that of course, from 0% to 0.25%, it means you have to pay something out.
Now, the very important thing here is actually not the spike. Is for me, right? Is if you observe from 2009 all the way until this year, or literally this week, the interest rate regime has been close to zero, basically. In fact, sometimes you lose money by putting money in the bank.
Yes, exactly. Yeah.
So,
but I think nobody expected the Japan to actually increase rate. They think that Japan is still like in the deflating economy, so increasing rate is like it doesn't make sense to them. But then when they do that, they are encouraging more people to actually come back to Japan. That is what the government of Japan is doing.
Might sound funny, but maybe they don't want too many tourists.
Okay.
Because if you look at the Malaysian MYR to JPY, I'm not sure of the chart here. Maybe it went from 27 to about 30, 31.
Oh, yeah.
But irony is now it's at 33. So actually the high was 34. So now it's like 30, 32, 33.
Yeah.
So the yen is quite weak, honestly.
Exactly.
For us to go there, like you can get a good meal for 20, 30 ringgit, which is pretty much Klang Valley prices really, right? In Japan. So imagine if you're Singaporean, right? You go there, you just pay 5 sing a meal, 10 sing a meal. It's like really
could
good.
Could be.
Yeah.
In terms of like recession, right? So the shading over here is a recession. You can see when they actually hike up interest rate, recession actually starts to like creep up.
Yeah,
and
but I
that's what's
think
happening
it's
right
also
now.
worth noting if you look at the previous 3 occasions. Well, first of all, it didn't happen in COVID, that small little
Yes.
black line on the right, gray line. But you can see that in the 80s, they raised during I want to say 89. But then only in 1990, late 1990s, 1990, close to 1991, that's when it happened, right? So similarly, so this one is a bit closer, right? From to 1999, they start raising rates. Then they actually cut, right? Then it went up, and then 2006 they raised, but then it took 2008. So it's not quite as simple as, now they raised, so crash is coming tomorrow. But we can see some signs, right?
Yes, exactly. Okay, so just to give you an explanation, basically it's something to do with yen carry traders. So what does this mean is that people who actually borrowed money from a Japanese bank, basically at 0% interest rate, they use that money to actually invest in a potentially high return asset. So in that case, it could be stock market, it could be in the stock market like Nvidia, or it could be in crypto like Bitcoin or even
correct. So a lot of people are doing that. But what's interesting is that a lot of people that went in did not, at least the early adopters for this strategy, right? They didn't necessarily come in to buy those stocks, but to buy relatively safe investments. I mean, if you borrow money at, let's say, almost close to 0%, and you use all that money and you buy, say, bonds, which maybe yield you 2% or 3%, right? That's free money, basically.
Yeah.
Right?
But I think
then it transform into Ethereum, Bitcoin.
Yeah.
Because Warren Buffett does the same thing.
Yeah, exactly. I think this one is because the fund houses just got too greedy.
So the irony is, as we were discussing before, Warren Buffett started it, maybe, or like he's one of the ones that popularized it, and so a lot of fund houses followed him probably.
Yeah, exactly. So, fun fact, Japan is the largest creditor in the world. They have a NIIP of 3 trillion, if I'm not mistaken. NIIP is basically your net international investment position. You can Google it. What is it? And there's no more cheap debt. Overgeared investments, people who take in margin are getting margin called, and hence the sell off. Now, not only just the Japan, but the US also has reported quite bad stuff. So number one is the non-farm payroll. This one is basically the 80% of people who is working that contributes to the US GDP. So you can see that basically unemployment rate is trickling up a little bit by like 1%. And then you can see that private sector payroll growth is actually dropping.
Yeah, because the number of people on payroll.
Yes,
right?
exactly.
Yeah.
So basically just showing you signs that more and more people are not getting employed and paying less. So this is the definition of non-farm payroll. Is basically a popular measure of number of US workers in the economy. As I mentioned already, they account for 80% of workers who contribute to the GDP, and this is what it doesn't include. So fun fact. Now, not only that, the PMI also has been very bad. I mean, you can see that there's a lot of protectionism mechanism that the US is actually doing. Yeah, they are fighting with China. Then also they are doing a lot of like tariff against EU and other countries as well. So not so good outlook for US PMI at the moment. You can see that it's now down a little bit. I think it's around like 48 to 49 points.
But I think the important thing to look here is actually the previous 6 months, not the latest 6 months. So let's call it 2023's numbers. So it was down. So usually there's a lag because PMI is measured based on 4 criteria. I won't go into all, but the 2 big ones are new orders and inventory. So are they stocking out inventory? And usually people stock up inventory, especially for manufacturing, if they're getting new orders. So if these 2 goes up, your PMI will go up beyond 50. But you can see in 2023, they were below 50, meaning the orders and all that will be contracting. Now, why it's important to think of it in time lags is because, think about it, right? A lot of the stock market follows the earnings of a company. But the question is, what determines the earnings of a company? It's the orders, right? It's the orders, it's stocking up the inventory. And guess what? A lot of companies, when they stock up inventory or when they get new orders, even if they sell well, it won't appear immediately, right? It will appear at a bare minimum also 3 months. So realistically, it's about 6 months before it starts coming into effect. And also another component of PMI is also whether you're hiring more people. So in fact, it is a leading indicator of the non-farm payroll. Because non-farm payroll is just telling you how many people are on payroll or hired.
Yeah.
Right? But what determines beforehand whether people will be hired or not would be the companies itself. Right? Because the top 500 largest manufacturing companies, they'll do a survey and then they'll say, hey, are you hiring more or hiring less? And so this signal is, new orders, inventories, hirings are probably not as good.
And then you have like the company like Intel also laying off like 15,000 people.
Yeah, because that's what already happens.
Yeah.
Right. So one of the things we shared in our webinar was this exactly, if you recall, a few months ago, during 2023, in fact.
Yes, exactly. Yeah, and then you have this Warren Buffett selling his Apple shares.
Yeah.
Actually at the peak. So it's the right timing. But interestingly is that 6 months into 2024, they actually just bought 4.3 billion worth of stocks, but they sold 97.1 billion worth of stocks. And then I think they are holding about a cash pile of 277 billion.
I think it's largest all time.
Yeah, it's the largest all time. So not to say that when Buffett sell, it's a sell signal. Because there are some times where he actually sold it too early. So for example, like Costco, after he sold it, then Costco went up 3 times.
Yeah.
He sold McDonald's early also in the 1980s. Then McDonald's went up 15 times. So not to tell you, this doesn't show you a sell signal. If let's say,
I think that's very, very, very important. And I just want to address the cash pile. I think a lot of people see Buffett have a lot of cash pile means that he thinks a recession coming. So number one, Buffett has been consistent since the beginning that he doesn't really predict and time the market, and he timed the stock, but he doesn't time the market, right? Number two is you have to understand that Berkshire Hathaway is a reinsurance company, meaning they insure other insurance companies, and of course they also have an insurance arm. So for insurance companies, they always need some sort of cash, because especially for Warren Buffett sort of insurance where big events like Hurricane Katrina can happen and it can wipe out. It can cost them, quite a lot in claims, billions in claims. So he always need a cash pile to ensure that there's fiscal stability. I won't go into the math, but I wouldn't be surprised that at least $100 billion of that is saved for this
insurance. The claims.
Exactly. And then the second thing is, Buffett, because the size is so big, he can only invest in a few shares. So as such, the options are not as big as you and I.
Yeah.
So that's why his cash pile also go up, because he has no idea based on this bond that he has.
Yeah.
So I think 2 big reasons why we should not take Buffett's activity. And I have to remind people of this every single year, because when you announce a report or we sell something like that, people always say it's a sell signal. You can still sell the stocks, but for other reasons, not because of Warren Buffett. So I have to remind everybody that, hey, Warren Buffett is not a signal, right, to buy or sell.
Yeah, exactly. Okay, then we have China also. So China's PMI also has been dumping.
Yeah.
The poor country is getting like hit left and right by EU and also
the Olympics.
Yeah, the Olympics and also the US. So generally, everything is not doing too well in China. And you can see that their GDP also kind of like slowed down a bit in terms of their year-on-year growth.
Malaysia is 4 point something as well.
Actually, our Malaysia, I think it's like 5 or something. I remember that ours is like better than China.
Yeah.
At the latest quarter. So yeah, everything is just not too good for these 2 big countries. And then we have the war. So yeah, unfortunately, Hamas political leader,
one of their leaders, was air-stricken, right, in Tehran, Iran.
Correct.
And of course, people think this might escalate the situation.
Yeah, and then also Russia also say something like, we also can supply military support to Iran. So his comment also, obviously, people will think that, hey, maybe a potential World War III is going to happen.
Yeah.
These two is going to escalate. But yeah, so basically all of these lead to a domino effect to the market. So that's why you see a stock market crash at the moment. Now, the last question that you want to ask is, of course, so should you sell all? I think we answered this quite a lot of times already, and we have been repeating our
Buy
answers.
and sell what you understand.
Yeah,
That is
exactly. Yeah,
essentially how it is, right?
Yeah.
And we have a Telegram group chat in our Fire Pro group, and we're recording this on a Monday. I woke up, I saw there was a lot of chats, so I chimed in. I had to comfort a few people, like, hey, you don't, some people already hold the stocks. Say, hey, go out and touch grass, go and feel the sunlight a bit. Then some people on the sidelines who have cash but are a bit scared, they say, hey, you don't have to jump in. The stock market will always be there. Your peace of mind is very, very important. So really, you need to do the homework, right? To a lot of people, in the next week or so, is going to be like grocery shopping, right? But more important than saying that, hey guys, things are on sale and grocery, time to collect some grocery. More important than that is a grocery list. If you don't have that list, then it doesn't really matter whether things are on sale because you don't know what to buy. How do you get that list? Well, you need to have done your own research, right? Produce your own watch list so that when things start to fall, you making that decision to purchase will be more comfortable and more clockwork. There's not a lot of second guessing and emotions involved.
Yeah. And speaking of grocery lists,
Yes.
you can check out Fire Pro because in our write up, we basically share our thoughts on companies that we have. Some of them we have high convictions on, and some we own shares also. And we will let you know if we do in our write ups.
As I don't think it's 59%
Yeah, exactly.
in August because it's down. So, to be honest, and honestly, even for my own personal, I don't know about your personal portfolio. My personal portfolio is down. I think
everybody's one is down.
A few cars,
Yeah, exactly.
So, the only thing that is not down in my portfolio is like gold.
Yeah.
That's it. It's not down much, or at least.
Yeah, exactly. So if you want to know how we write our write-ups, you can actually check out our free sample. That is where we show how we actually analyze a company, how do we evaluate, how do we do research, how do we value them. So if you're interested to read up, make sure to check out the free sample. It will be at the description and also in the comments down below. But other than that, stay invested, buy companies that you understand, and yeah, that's about it for today's video. See you guys next week.
Bye-bye.